When I started on my trading journey, I learnt the ropes and I paper traded for 9 months. I then went live and funded my account with 8 grand and I wiped out over half of it straight away. I then spent 2 months clawing my way back up until I got back to the point of breaking even again. That was 5 weeks ago, and since then I've been steadily gaining in profit, and last night I finally doubled my account. So let's see how I did it. As of last night, my trading account sits at just over £16,000, which is double the amount I put in there to start with. And this is the moment it happened. I've been keeping a very close eye on the current tensions in Ukraine and how it has all been affecting the Dow Jones. And earlier on in the day, I'd made a nice profit of £600 with a short position at the market open. Now for most of the day, I'd been keeping an eye on the charts as it had been mostly moving sideways. But at 7 PM last night, I went back in for the kill, as the price was looking like it was about to breach the major support level at this point. And so I rode a short position down until it stopped me out at 35 points to bank £300. With the Dow suffering its worst day of the year and the possibility of an outbreak of war, I was very pleased to say that I doubled my account up to 16 grand. But getting to this point wasn't all plain sailing, and it took a few ups and downs to get there, quite literally. Looking at my profit and loss chart, you can see that I funded my account in mid-October 2021 and immediately went into the red. For a brief spell, I managed to get back up into profit at the beginning of November, but like a lonely island poking its head up out of the water, you can see it didn't last long, thanks to a really terribly timed trade, which I held on to for a few days until I woke up to the new discovery of Omicron and a margin call, which rather annoyingly wiped out 5 grand of my account. Lesson learned. So after losing this 5k of my 8k account, I dusted myself off and started my comeback at the end of November, starting with an account size of 3k, and I started trading better than ever, and I managed to double this to 6k in 2 weeks. Not quite sure how I did that. But overall, I was still down by 2k, so my perseverance didn't stop there, and within a few weeks I had doubled the 6k into 12k by the end of January. So technically I've doubled my account 3 times already. It's just these first 2 times I did it was in negative territory. But that still counts as an account doubling, doesn't it? Well, let's just forget about those 2 account doublings, as they don't really count. But seeing it like that helped motivate me at the time, especially after taking such a beating. So going from the break-even starting point of 8k, I doubled it and hit 16k in 5 weeks. This was done by averaging between £200 to £300 or 3% of my capital per day. And then as the account grew, that would scale up to around £400 to £500 per day, which would still be about 3%. But there were many days where it actually hit more than that. And in fact, there were 3 occasions where I hit £1,000 in one trade, which really helped to boost the account up. Obviously, there were some losses as well, as you can see from the P&L chart, which looks like a very drunk person's GPS tracker. But on the whole, I would try and make up for the losses to get back to my daily target each day. And every week, I ended up pretty much bang on my weekly target. Having a daily and weekly target to work towards is key, as it can really help keep you focused. It can also help you decide on an entry and exit strategy and can really help to avoid overtrading. This all helps with consistency, which over the long term develops into well-disciplined habits. Now honestly, I'm not the most patient when it comes to aiming for targets, and therefore I'm also not the most conservative trader either, as I tend to just throw everything I have on the table to make the maximum return in order to hit the target as quickly as possible. Now to be fair, this approach has enabled me to double the account in a very short space of time, but has of course massively increased my risk as well. If one trade goes against me and I don't have the discipline to close it and take the loss, I risk getting margin called and wiping out all that hard work in one quick swoop. So I'm keeping strict with my risk management, and I'm cutting losing trades early when it goes against my plan. And I've set myself the goal to keep going until my account reaches 20k. And from that point, I plan to downsize my margin from almost 100% to around 50%. The benefit of doing this is if a trade goes against you, you can cut the trade without taking such a huge dent to your capital. It also means you can stay in a losing trade longer without the risk of getting margin called, which is really handy if the trade goes against you, but you really believe that it's going to come back in your favor based on your analysis. And so you can give it room to move. Now, it's generally good practice for all traders not to throw everything they have down on one trade, as this is obviously the riskiest thing you can possibly do. So it's well worth adjusting your margin to around 50% of your capital. So instead of maxing out and buying, say, 10 contracts, you just buy 5 instead. Now you may have noticed something on my P&L chart here, and that is how the line goes from being all jagged to becoming a little bit more rounded and smooth. Right from the beginning of February, something in my trading changed, which contributed to me losing less and winning more. And that's because I stopped trading price action alone. From the beginning of February, I started trading price action, but backed up with an understanding of the current economic and political climate. And it's this up-to-date awareness of what is going on in the US and the world that has contributed to my rapid improvement. When I first started on my trading journey, I learned to trade stocks, but very quickly found that it was taking up far too much of my time, as I would have to dedicate a lot of time researching companies and looking at earning reports. I then found trading futures to be much less time consuming, as I could just trade the daily price action and patterns without having to do any research at all. I've since found this not to be the most consistent of strategies. Sure, it works, as you can see from my P&L, but it isn't consistent enough for me, and it felt like there was still an element of gambling involved. I have therefore completely stopped trading the FTSE. As you can see, this was the least profitable for me, as I found it much harder to trade the price action. And I kind of find the UK news doesn't seem to correlate to the FTSE that much, or not in a way that I can clearly understand anyway. And so I'm now completely focusing on the Dow and occasionally the Nasdaq, although now I'm fully engaged in staying up to date with what's happening in the news, and I can justify spending time doing this as I'm genuinely interested in geopolitics and the US economy. And you know, it's never a waste of time being clued up on these things. And you can see, since implementing this into my strategy at the beginning of February, that my losing rate has significantly diminished. Every day, before the market open and as I go to bed, I open up the Apple Stocks app and have a read of the news articles that are associated with the things that I have on my watch list. I also use the CNBC app, and I keep my eye on the economic calendar to keep completely up to date with what is moving the markets. Equipping myself with up-to-date information and getting to know the current economic climate has given me the confidence to go into trades each day, knowing that the decisions that I make are justified and well executed, and you can see that it has really paid off. Recent stories such as the current US inflation crisis and the looming interest rate hikes, and of course the possible outbreak of war in Ukraine, have all been catalysts for market volatility. And the sentiment behind these stories has given clear direction in which to trade and make a profit. If you're trading futures, then you will really benefit from understanding what is moving the markets and why. Now, during the tensions in Ukraine, the news up to last week had all been geared toward the fact that Russia had troops on the border and were ready to invade at any point. But on Wednesday, news came out that some Russian troops had actually been pulled back and the amount of forces on the border reduced. Sounds like some good news to me. So I went in for a long position at the market open on the Dow Jones. I waited to see if it could breach the first two levels of resistance, which it did, and so then I placed my entry. The good news paid off and I took my 3% target of £400. Now, I wasn't tempted to stay in any longer or go in for another position, as this news may have been good on the surface. But when you think about it, do you really believe everything Vladimir Putin says? He claimed that some troops have been removed from the border, but many still remain. And really, were any troops removed at all? Additionally, there are still worries over inflation and when the Fed will be raising rates, so this slight glimmer of good news had to be taken with a pinch of salt, especially in political climates such as these, which are renowned for being particularly difficult to trade due to the vast uncertainty of it all. But as expected, after this initial optimistic rally, the price then dropped right back down to the opening level and then spent the rest of the day meandering sideways, not really knowing where to go. So it's always wise not to just take headlines on face value, but really dive deeper into the story and think about it logically, and cross-reference what's going on with other factors that might come into play, such as the inflation worries. Now, in my previous video, I talked about the 10-year treasury yield and spoke about how it's a good gauge for market sentiment, and I used the example of rising yields signalling possible future interest rate hikes. Another example of when the 10-year treasury yield can be useful is at the moment with this current threat of war. In times such as these, investors panic and they sell their shares in stocks and put their money in treasuries instead, as they are much more secure. This sends the price of the bonds up, which causes the yield to fall, as yields always move inversely to prices. So when we see the yields falling, it's an indication that stocks could fall as well, because money has been taken from stocks and put into bonds. This can give you the confidence in placing a trade when you have a confirmation like this. Remember though, it's never an exact science, so be cautious, practice, and have your risk in order. So that's where I am today, and hopefully I will have doubled the account to 32k in the next 5 weeks, so I'll keep you posted on that one. But trading is an ever evolving skill, and you will adapt the way you do things all the time until you really start nailing down your consistency. And you will keep adapting as you go on. It's really useful to look at your P&L charts over time to see changes in your performance, so you can work out whether what you're doing is working out or not, and get yourself into the habit of reading the news. It's all actually really quite interesting and will definitely aid your trading. But take time getting used to it all, and as always, practice with the demo account until you're really confident. Now, I'm almost at 500 subscribers, which is incredible, and I'm so grateful to everyone who watches this channel, and to those of you who are so kind and supportive in the comments. It really makes all this worthwhile. So if you haven't already subscribed, what are you waiting for? Let's get it up to 1,000 subscribers. And don't forget to give me a like as well. And if you've doubled your account, tell us about how you managed it below, and maybe I'll read some of them out and talk about your stories in another video. And come and follow me over on Instagram as well for more content and loads of live trades. So good luck, and I look forward to seeing you in the next video right here on MAFFMARKET.